That said, Zen Technologies, that's a stock on our radar. They secured a new export order of around 40 crores for the state-of-the-art defense simulators. To discuss this, what's the outlook from here on? We'll be joined by Mr. Ashok Atluri, the Chairman and Managing Director of the company. Hi, Mr. Atluri. Good morning and thanks so much for joining in. Well, a 40 crore order win is what you've got from the export market. Give us some more details. What's the execution period of this? What's the margins? And also, what is your updated outstanding order book?
So updated order book position is about 1,500 crores. And with respect to the execution timeline, we have about 18 months. And this will be executed in the next 18 months. So these are two things. And this is for simulators that we are. So we differentiate very largely between simulators and non-simulator like anti-drone. This is a simulator order that we have got.
Got it. So this order will be executed in the next 18 months is what you're telling us, right?
Yeah, that's right. Yeah.
Let's break down this 1,500 crore order book then in simulators as well as anti-drone system. What is the breakup out there? Because earlier people were riding on the simulator story. Suddenly anti-drone system has come and that's what's got the street for us, in terms of both these two segments. And also geographically, how much of the order book is domestic? How much of it is export?
So approximately six anti-drone systems and 800 plus is simulators. And in terms of exports and domestic, about 400 plus crores is about 1,000 crores. Yeah.
Okay. What is the revenue from the Indian government currently as a percentage of the total revenue, if you can tell us that, and how much the next couple of years, Mr. Atluri?
So, most of the orders, Indian or domestic orders are from the Indian government. So, we don't have any other client mostly. And if they organization, but that's very minimal. And the growth is, for the current year, we have been saying that we'll do about 450 crores. And the rest of the order we plan to execute in, FY25.
So 450
that
crores.
That will be about 900 plus crores. Yeah.
Okay. So 450 crores is what you will execute in FY24, correct?
That's right, yeah. We expect to execute that, yeah.
Okay, I think that's something you had said earlier. Can you tell us on the margin side, what is your expectation for FY24 and 25?
So we expect EBITDA to be maintained around 35%. And we expect in the next couple of years also. That's the minimum target that internally, a very conservative target. We do hope that we'll do better than that.
Mr. Atluri, I probe you quite often about how you see revenue scaling up. And you're saying your order book is close to around 1,400 to 1,500 crores. 450 crores you'll execute this year, plus you're getting more orders. And the remainder, most of it be executed in FY25. So for FY25, you're looking at revenues of around 900 crores, 8 to 900 crores. Did we hear that correct?
That's right, 900 plus crores. You're right, absolutely, yeah.
900 crores with margins of around 35%.
That's right, yeah.
All right, and getting into an election period, now whether it's state elections or we're going to have a big central election as well next year, do you see any risk to payments? Does that receivable position get, expanded a little bit? You've told us in the past that payments are coming within 45 days, if I remember correctly. But if you could update us on that situation, how do you think things panning out?
So, we expect that, that payments promptly, and in some cases, especially non-central government cases, they are getting a bit delayed. Otherwise, and as we go ahead, I think there is the agreement with across all the spectrum that the economic policies, especially related to defense, are very, very proactive and very, very progressive. And so there is no disagreement in that, even in the across political parties, that this is the way to go economically, at least for defense. So I think we don't see any in the future in this regard.
Sir, can you tell us about the tenders which are currently being floated, where you are participating, and what would be the size? When are we likely to hear from them?
So, I would say about, for this year, another 400 to 500 crores worth of orders. The pipeline is there. And we think that we have a good chance of winning most of them, yeah.
So another 400 to worth of incremental orders this year is what you're looking at. How much of that will come in from exports? Because you did mention earlier that close to 50% of your business will eventually come from exports. Some visibility on the export market as well?
So export, there are some big ticket items being discussed, but they're not very clear. So I'm not included in this 500 crores exports order. But yeah, so that's the one big. There may be some pleasant surprise. I don't think during this year, maybe the earliest that we'll get a big export order.
Okay, since you're going to be executing a large proportion of orders, your R&D spends could go up, right? Where do you see this number? Just a few years ago, you were doing 100 odd crores. Now you're saying you're going to do 450 crores, and order inflow is coming in as well, which was the big problem. Spend move up.
So so again, the reason the R&D that we spent earlier on, I mean, that is there is a lag between. A lot of companies don't like the R&D coming on their thing, and we account it in the same. So, but I do expect, and we are very, very opportunistic in the other large, companies which have a fixed as a, 8% to be fixed as R&D. We go after opportunities. If we think that it's a bet where we put about 5 to 10 crores and we get 1,000 crore or 500 crore opportunity, we go after those kind of opportunity. And again, they need to be built on the libraries that we or our subsidiaries have. So then our incremental effort is very less compared to any other competitor. So that is where, and again, we always, when we are doing R&D, when we are doing R&D on a product, our view is 5 years to 10 years, and we should become a globally dominant company in the next 5 to 10 years. So if we cannot, we really don't try to do that, because we want to, of course, offer the best in the world to the Indian forces.
Mr. Atluri, final question before we let you go. In the past, the problem has been in order inflows. Now, execution is picking up and your order book is fairly good. But do you think, say, in the next couple of years, is there a possibility you again get into a sticky situation where the order inflows don't match up to the revenue recognition that you're doing? Because that's been a risk in the past. Or do you think now, both domestically as well as internationally, the scope for your business is tremendous and you don't see any kind of headwinds?
So, I mean, as an investor, I would have that question. But again, we have been having order book position of 100, and we were asked the same question. We came to 160, this was the same question. Last year, we were 400 crores, the same question was asked. Today, we are about 1,500 crores, the same question is being asked. I think the order book position is going to improve tremendously. Last year, I said, when it was 400, I said we are going to be better than that next year. But we are almost 3.5x that. So we expect something, this trend to continue at least linearly, into the next couple of years.
Just a quick one-word answer, sir. What's the capacity utilization there for you right now?
So we are about 40-45% kind of thing. Yeah.
Got it.
So again, just to clarify, it cannot be a yes or no question, but we have a supply chain that we outsource all our manufacturing to. So they still have spare capacity for us to scale up. And that's what I wanted to add.
Okay. We'll leave the conversation here for now. Thank you very much for joining in. That's Zen Technology, up 4% today and 280% in the last 12 months.